Hey, family, the video that the majority of you have been waiting for is the 2025 W-4 for married couples filing jointly. Before we go through this, I do want to give the disclaimer that this advice is educational. It is not specific to any one person's tax situation, although I will go through a few scenarios. Okay. So W-4s are due to your employer for updates by February 15th. In today's example, we are going to use a household name. We are going to use Mrs. Lucille Ball. Now, I want you to name your favorite I Love Lucy episode in the comments just for 1,000 extra bonus points, right? So when filling this out, we want to make sure for step one, we have your first name and middle initial as it appears on your social security card. Okay. So in this situation, we have Lucille, middle initial D, bonus 1,000 points for you if you can tell me what the D stands for. Last name Ball. Then this should go without saying, but I must say, you want to make sure that the social security number that you use also matches what's on the social security card. Okay. That's important just for making sure that you're getting your points for social security and to make sure that when you go to e-file your return, it will actually go through. All right. Then you want to have your most up-to-date address or wherever you receive mail. Now, this is going to be important because this is where your W-4 is going, or your W-2 rather, is going to get mailed the following January. So in this example, we have Lucille D. Ball, who is at 69 Stewart Avenue in Jamestown, New York, zip code 14701. In this example, we are doing married filing jointly, so we're going to check this box. Now, this is the part where a lot of people get lost. Okay, so let's just say in our first scenario, Lucille only has one source of income. She is married. Her spouse does not have any income. In that situation, we would skip step two, okay, because there's only one income for the whole house. Lucille and her spouse, they actually have two dependents under the age of 17. So what we're going to do in step three is take the number of qualifying children and multiply that by 2,000. So two children times 2,000 is going to be 4,000. Okay. Now, in their situation, they may have been above the threshold to claim this credit because it does phase out for married filing jointly couples at $400,000. But for the purposes of this example, let's say that they are under that threshold, okay? They have no additional dependents. So here in on line three, rather, we're going to have the $4,000. All right. Now, we already said there's no other income, so we're going to leave 4A blank. Let's assume that they use the standard deduction since the majority of American taxpayers do. And we don't need any extra withholding because there's no additional income. And Lucille would like to receive more of her money in her paycheck versus having a bigger refund at the end of the year. Keep in mind when you put your dependents, when you put your additional income here, what is going to happen when you have the dependents as a credit is that you are going to have more money in your check throughout the year and you will receive a smaller refund. Now, the reverse happens if you list your other income deductions or have extra withholding. For extra withholding, you will have more withheld from your paycheck and it will either help you to not owe or you will get a bigger refund. All right. So with the two children, now we can sign this, date it, and turn it into the employer. But let's look at another scenario that's more common. Let's say Lucille works and her husband also works. All right. So now what we want to take into consideration is how are we going to make sure that when they file together at the end of the year, they're not going to owe? As it mentions here in step two, there is an IRS estimator. All right. You can go to this website right here. And what you do is you take the amount of projected income for the year and the amount that will be withheld, and it will give you exactly how much you are supposed to have withheld each pay period. All right. The second option is to use the multiple jobs worksheet on page 3 and have extra withholding in 4C. So that's going to be what I'm going to show you next. Now, if Lucille's income and her husband's income are going to be very similar, she would just need to check this box. So let's say that they both made $100,000 on her W-4. She's just going to check this box. Down below, we need to make sure that both spouses don't claim both children. Otherwise, we're not going to have enough withheld. So since they have two children and similar incomes, they've agreed to both claim one child each. So on Lucille's W-4, she's going to have that box checked. She has one of the children, so we have the 2,000 here and here, and her husband will do the same. Now we can sign, date it, and turn it into HR. Okay? That's if the two spouses have similar incomes. Now, if they don't have similar incomes and one makes more than the other, that's when we need to go to the multiple jobs worksheet on page 3. So here on page 3, when we have two jobs, we look at the higher paying job, all right? Those are going to be in the rows, and then the lower paying job is going to be in the column. So for the purpose of this example, when we go to page 4, let's say Lucille's income is higher, okay, for the purpose of this example. Let's say that she is making $150,000 a year, okay? So what we're going to do is we're going to find the $150,000 row. So it's right here, all right? And then let's say her spouse makes $100,000 a year. So we would need to go right here. So there we have $16,890. That's how much they need to have withheld in addition to what will automatically be withheld on the W-4. So we go back up here to page 3 and we have the 16,890. Okay. Now, once we have that figured, we need to see how many more pay periods are there in the year. If you were doing this and turning it in by February 15th, let's assume that you've already been paid 3 times if you're getting paid every other week. So that would mean you have 23 pay periods remaining. So we would want to put 23 here, and we're going to divide that 16,890 by the 23. All right. So we need $734.35 additional withheld each paycheck. Now, here's the part that throws some folks off. That amount is going to go on line 4C. Now, some people want to have that additional withholding from the spouse who makes more. All right. But if you are married filing joint, it's pretty likely that all of this is going to come out of the same financial pot, right? For the IRS, they don't care where the additional withholding comes from. They just want to make sure that it gets done. So, what I've seen some couples do is they will allocate this based on who makes more. So, in this example, Lucille's spouse makes 100,000, she makes 150. So maybe she will do 67% and her spouse will do the remaining 33. Okay? Or they can split it 50-50. So if you were going to split this 50-50 with the spouse, This would turn into 367.17. We're going to sign and date it. So you may be thinking in this example, what would the spouse's W-4 look like, right? So let me show you. Let me make sure that you can see our other spouse. All right. Let me make it big. Bear with me a moment. All right. Here we go. So we have now, uh-oh, my apologies. Had to make sure you guys can see the right spouse. All right. Here's the spouse. And in this example, I am not going to mess up Desi's full name, but we have Lucille's spouse, Desi A. Arnez, right? Social security number, same address. The spouse is going to check married filing jointly as well. And then we already know that we are using the multiple jobs worksheet. He is going to claim one of the children on his W-4. So we have that $2,000 there and here to account for that. And because we are splitting it 50-50 to make sure that they are not under withheld, and that's what they felt would be fair in their marriage, we're going to put $367.17 right there. Then Desi can sign his and date it and turn it into HR. Now, a common mistake that I see couples make is they do not communicate who is claiming which child. And remember, at the end of the year, you're going to file your tax return together. We just want to make sure the withholding is correct. So, if you have two children on yours and you only have two children, that means your spouse should not have any children on theirs, and vice versa. Okay? If you only have one child, then that means only one of you should have your child accounted for on the W-4. Okay? Otherwise, you'll be under withheld. I hope you found this video helpful. If you're new here, I am going to ask you for a favor. My name is Timalyn Bowens. I'm America's favorite EA, and I'm on a mission to fill the tax literacy gap. If you would do me the utmost favor, please like this video, share with all of your married friends, okay? Because in my efforts to fill the tax literacy gap one taxpayer at a time, I believe in this preventative care to help you not end up owing the IRS, okay? And you would be doing me the hugest favor if you share this with all your friends and family. Thank you. I'll see you all in the next video.